Hello. Today I want to expose one of the biggest propaganda lies of the commercial investment and banking industry. And as I'm sure for all of those of you out there that are watching this that do business with a commercial investment firm, you have always heard the mantra of buy and hold for any global major stock market, whether it's the FTSE in London, whether it's the S&P 500, in the United States. You've always heard that over time, because you've been shown that chart over and over again from like the 1900s, how the US stock market will always rise. But that in itself is very, very deceptive and misleading, because it does not take into effect the massive devaluation of the US dollar over the same time, because as you know, since its inception in 1913, the Fed Reserve has been hell-bent on destroying the purchasing power of the US dollar, and it's lost close to 98% of its purchasing power over that time. So if you take away, or rather if you adjust that nominal, what looks like a nominal rise all the time throughout time, for inflation, you'll see that a lot of those gains disappear, and in a lot of periods of time, actually, you'll have a very, very negative net loss over that same period of time. So take a moment to look at these three charts. Okay, so it's very clear that since mid 2007, the S&P 500, you're not even back to even. And again, this is only in nominal terms, not even adjusted for inflation. So you're still down negative 5.4%. So over the course of time, you've heard many, many deceptive lies from portfolio managers, such as the fact that QE is great because without QE, the S&P 500 would not have been able to double over time since like 2009. But obviously, if you look at that, go back and look at that chart, you see that even with this so-called double, the S&P 500 is still down negative 5.4% in the last 5-year period since mid 2007, because the only reason it was pumped up so much by QE3 and other deceptive practices was because it had virtually tanked. So portfolio managers don't remind you that if you've been holding on to the buy and hold strategy for the last 5 years, you're still down 5.4%. Now, if you go to the second chart, if you price it in gold, which is a real currency, you see that your losses are even worse. That the S&P 500 priced in gold since mid 2007 is down 65.53%. So that is your true loss of purchasing power. So your negative 5.4% in nominal terms. Really, if you had done the wise thing and bought, say, physical gold, that would translate into 65.53% loss. So if you look at that time on the flip side, commercial investment advisors will always say, oh, well, I'm not really sure about physical gold and physical silver because, they're both so volatile and so risky. But yet, over that same time period, they're telling you to buy and hold. And they say, oh, well, I don't know if you should ever buy and hold with gold and silver because it's so volatile up and down. But if you look over that same time period, both gold and silver were up about 166% since mid-2007, both. So you're looking at a 166% gain versus a 5.4% loss. Which one's better? As you can see, it's like pure propaganda. And then they'll tell you, oh, don't even think about investing in the gold and silver mining stocks because they have performed so poorly. But if you look at the third chart that I presented there, you see the Philadelphia Gold and Silver Index. Even if you had taken a buy and hold stance, right, like for that same 5-year period versus the S&P 500, it's still killing, it's murdering the S&P 500. So, over that time, the Philadelphia Gold and Silver Index is up over 37% over the same period of time. Okay, two other quick points I really want to make. One is the fact that the commercial investment industry is always railing on gold and silver bugs for saying that we have a one-track mind, always saying buy, 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 no matter what. And I think that's just a psychological phenomenon called projection. They're projecting their mantra onto gold and silver bugs and telling a complete distorted lie in doing so. Because basically, it is the commercial investment advisors always saying buy, buy, buy for U.S. stock markets, European stock markets, or whatever stock market is, the domestic stock market in their own country. No matter what the situation, even if it's a terrible time to buy, they're telling you buy, buy, buy because of, they're telling you that lie that if you buy and hold, you always make money, which I just have proven is a huge, huge lie. Now, on the other hand, any gold and silver expert knows that the banking cartel manipulates the prices. So we're not ever going to stay all in the market at all times every single year. So that's a blatant lie that they're telling about people, maybe novices to the gold and silver market, but certainly no one that would consider themselves an expert. Because if you're an expert, you're going to know this market is vastly manipulated by the banking cartel along with the prices. So there are times that it makes sense to exit and then re-enter the market in that capacity. So as a perfect example of this, I'll tell you that the Philadelphia Gold and Silver Index year to date is still down about negative 5.5%. On the other hand, my Crisis Investment Opportunities newsletter, because we exit and re-enter at times the market based upon our understanding of this manipulation, is up 29.30% right now for the year. And over the past 5 years, we've told you the Philadelphia Gold and Silver Index has performed to a very solid performance of 37.90%. Compared to the S&P 500, again, down negative 5.4% over the same time period. Well, our Crisis Investment Opportunities newsletter, because we see this manipulation, understand it, again, we will exit. We don't stay in all the time. We don't always say buy, buy, buy gold stocks, buy, buy, buy silver mining stocks like the commercial investment and advisors try to portray us as, like these lunatic, always bull gold bugs and bull silver bugs, even though that's how they are in regards to the stock market. So again, my newsletter over that same time period when the Philadelphia Gold and Silver Index has returned 37.90% is up over 204% because we're exiting at critical times and we are re-entering again at critical times. So again, this volatility that the banking cartel introduces into the gold and silver market is they only do that to scare you out of the market because they incorrectly equate volatility with risk because this is a manufactured, manipulated volatility with gold and silver. And this is a topic actually I've discussed dozens of times since 2006, since I've been blogging on 2006, and also discussed in some of these past videos. And I've even discussed the other second point quickly is the fact that, it is true that commercial investment professional employees will say, we'll be bullish gold, we'll be bullish silver. Well, that wasn't true until, just a couple of years ago. They used to be always perpetually anti-gold, anti-silver. But there is a Machiavellian side to their bullish slant in gold and silver as well. And I'll cover that in a previous video that says how going long gold and going long silver can be harmful to you as well. So check that video out to understand how sometimes the commercial investment industry is still being Machiavellian when they're telling you to go long gold and go long silver, because timing is a key issue, with building wealth in gold and silver and making it and being profitable. Okay, so that's all for today. Thanks for watching and have a great day.